This
with 30
conference will
years.
now be recorded.
And but I go farther back than that, and I go as far as back as I used to prepare cost reports by hand. So I understand in detail the concepts of the cost report and where one number goes and where one number follows. So hopefully I can give you some good insight today. As Greg mentioned, this is just an overview of Medicare cost reporting, and as the series continue, we're going to get into greater detail of the cost report. So with that said, we can get started. So what we're going to cover today is an overview of what the Medicare cost report is, and what type of information it reports. And it reports an abundance of information. So we're going to lay down the foundation for our training series by providing a comprehensive overview of Medicare cost reporting. And then we're going to explore some high-level concepts to give you a broader context before we dive into the details in subsequent sessions. So we're going to discover how the cost report impacts various types of hospitals who utilize the cost report, and how it can be leveraged to your advantage. We're going to learn who utilizes the cost report, and how it can leverage it as a strategic tool in your organization. This portion of today's agenda is the one I'm most excited about, because the cost report has all of this information. And what I have found out over the years, that you can use it not only as a settlement report for Medicare, but it's a good way to quickly look at some data. And that's what we're going to cover today, and how you can use that data to assist in some financial decisions in your institution. Okay, so again, what is the Medicare cost report? It's a series of forms that really collect descriptional, financial, and statistical data to determine whether or not you owe Medicare or Medicare owes you at the end of a fiscal year. It also will establish payment rates. They'll take the cost report, the most recent one that you filed, and try to estimate what they should be paying you in your current year based on that previous year's cost report. And sometimes they'll be using the cost report prior to that, because it's just been filed, and you've already been into your fiscal year, depending upon at the end of your fiscal year. So they utilize the cost report to establish interim rates, estimated payments for your hospital, and they obviously try to come as close as possible, not to overpay you, and obviously you don't want to be underpaid. So you should review those rates and to make sure that they're correct and up to date. And it also can have some impact on some other payers, depending upon the state that you're in. In Massachusetts, for instance, it's not used to develop Medicaid settlements or payments, but in Maine and other states, it is. So depending upon where your hospital is located, what state it's located in, it could impact your Medicaid settlements, your Medicaid payments as well. And then the Medicare Advantage payment rates are also impacted, and those basically, in most cases, are what Medicare is paying for regular Medicare payments. So they usually follow suit. Okay, so what type of information is in a Medicare cost report? You're going to establish your provider type. And this is important because depending upon what type of provider you are you rural, urban, are you a critical access hospital, are you a PPS hospital, it'll establish your payment. It also will identify the ownership status and whether or not you're a teaching facility. And that's important because if you're a teaching facility, you could be getting medical education payments, especially if you're a PPS hospital. And based on the number of residents that are rotating through your hospital, you'll get additional payments. But I'm sure we'll get into that in the future classes. But for today, we just want to talk about it. It has.
I don't want to interrupt because we had a question come through. You mentioned
Sure.
earlier about the various states and Massachusetts not being impacted, but on payments. But someone was asking specifically about Vermont and how the cost report impacts payments in Vermont.
Vermont it impacts the Medicaid settlements in Vermont. So there are pieces of information that are used to develop Medicaid as well in Vermont. Okay, so statistical data, again, the number of beds, it reports on the number of beds, patient days, and discharges and FTEs. And the number of beds is important because it puts you in a classification. If you're less than 100 beds, if you're more than 100 beds, the payment methodologies will change. So reporting on the number of beds, it has reports on your wage index and statistics used to calculate overhead costs. Square footage, FTEs, to take your overhead and drop it down into your revenue producing departments. It also segregates overhead, routine, ancillary charges. So, you can go to the cost report, and if you wanted to know what your operating room charges were, you could go to Schedule C and you can see your operating room charges. It'll break down your radiology charges, all of your ancillary charges, and it also will report on your inpatient day rate charges for adult and PD, ICU. So again, it's a quick way to go someplace and report and identify charges by ancillary, charges by routine, ICU, and so forth. And then finally, you fill out your financial data. It'll have a balance sheet, which you tie to your audited financials because you have to submit your audited financials with the cost report. Changes in net assets, a breakdown of patient revenue, and also your income statement. So, again, this is a report that has an abundance of information where you could utilize and get some quick answers and look at some, analysis of certain areas in your hospital. Okay, so who is required to file a Medicare cost report? Almost 90% of the healthcare facilities in the United States. Veterans hospitals and Indian Health Services do not have to file a Medicare cost report. Some children's hospitals have to, but not that many, and it depends on what type of children's hospital you are. But overall, 90% of the hospitals in the country have to file a Medicare cost report. And those include hospitals, skilled nursing facilities, home health agencies, hospices, renal dialysis, rural health clinics, and federal qualified health centers. So most of the hospitals, most of the health centers in the country have to fill out a cost report, but each one will fill it out differently. Okay, so how does the cost report impact various types of hospitals? Prospective payment systems, which is the PPS hospitals. The PPS hospitals, their rates are established in advance of a particular period. So your inpatient services are paid based on a DRG, not cost, and your outpatient services are also paid on a prospective payment. There really isn't any future settlement owed for inpatient and outpatient services for PPS hospitals. But there are items on the cost report that are affected, and there are settlements for a PPS hospital, and those are your Medicare bad debts, disproportionate share, graduate medical education expenses. If you're getting paid PIP, you'll have a settlement, for PIP payments, and any settlements related to special payments for certain designations. So you're not reimbursed based on your cost for PPS hospitals. It's a prospective payment. But for critical access hospitals, you are, and you're reimbursed on the basis of allowable costs, which are determined from the cost report. Inpatient rates are established based on, like I had mentioned before, previous cost reports. And what you'll end up with is an inpatient per diem and an outpatient cost to charge ratio. And cost report filings do settle amounts owed for critical access hospitals and any other type of what we'll call cost-based reimbursement hospitals. Cancer institutions are paid on cost. Critical access hospitals are paid on cost. And then you have PPS hospitals and other hospital systems as well. But you can tune into the rest of our cost reporting training series to develop more details. We're going to provide more details. This is just an overview. How does the cost report calculate Medicare allowable costs? Again, this is an overview, and it's much more detailed than what I'm about to present today, but this is a good way to get started. It'll assign cost and expenses to hospitals, and you will have on the cost report, you'll have lines that will be administrative in general. You'll have dietary, plant. Now, when you go to your trial balance, you're going to have a lot of administrative and general cost centers. You're going to have accounting, patient services, administration in general, and so forth. So the work paper and preparation of inputting that one line on the cost report is key. So you'll go from your trial balance, and then you accumulate the cost into A&G and patient accounting, and then that one number will then feed into the cost report. So the work papers support the numbers that are on the cost report. And then you'll have some reclassification of cost to match cost with revenue, and we'll get into that down the road. And then you're gonna adjust your cost, and basically you're gonna remove costs that Medicare does not deem reimbursable. And you're also going to offset some of your costs where you generate income. And a really good example is dietary. Dietary costs, before you're reimbursed, they're reduced by dietary income, which is the cafeteria income. Cafeteria, again, is when you go to your trial balance, you're going to have a dietary cost center, and you're going to have a cafeteria cost center, and then those get reported on the cost report, and the cafeteria costs are offset by cafeteria income. So there is income that is generated, non-patient income, other than patient care income, that you have to offset against cost. Okay, and then when you get to your net cost, you're going to step down your overhead cost to all of the revenue producing departments. And you're going to do this by, you're going to allocate plant costs by square footage. You're going to allocate employee benefits costs, salaries and wages. And so they're all statistical. There are all statistics that allocate overhead cost centers to revenue producing department. And then what you're going to end up with is what we call fully loaded cost. Okay, so all the overhead costs now have been allocated to revenue producing departments. And then you're going to compare that cost to the charges that are generated by those departments. And that's how Medicare will calculate its share of allowable cost. And then On Schedule E, you'll have a settlement calculation where you're going to compare what your Medicare costs were versus what Medicare paid you. Again, now what is Medicare paying you? It's paying you on an interim basis based on your previous year's cost report and also adjustments that are made throughout the year. So I like to always think of it as a tax return, okay? But it's just reversed. When on your personal income taxes, you're paying taxes to the government. Hopefully you don't pay more and hopefully you don't pay less, but at the end of the year, you try to come to an equal amount. What you owed is what you paid. For hospitals, it's just the reverse. The government is paying hospitals to provide services to Medicare patients. And at the end of the year, hopefully you either were underpaid or you might have been overpaid and you owe. So it's just comparing your Medicare cost or your Medicare PPS reimbursement to what you actually paid. And then you have all the other items that get calculated into the settlement that we had talked about previously. And then what we'll talk about more in the future, which is the indirect medical education reimbursement, bad debts, and so forth. And also Medicare will make an attempt to pay you what you're due for those services, and then it'll settle up with you at the end of the year. So let's talk about the life cycle of a hospital. What happens after a filing of a cost report? Filing is due 5 months at the end of your fiscal year, and then you'll have an amount due Medicare or amount to the provider. They'll review the report and come up with a tentative settlement based on what you filed, and then it also will get desk reviewed. They'll report, the auditor will propose adjustments based on its audit, and then a final notice of program reimbursement will be issued. And then a provider can request, after the final NPR, there is a 3-year period where you can request a reopening to challenge any audit adjustments that were made that you disagreed with. And also, you might find out that, when you filed the report, you missed something. You identified an error. You didn't have your bad debts when you filed your cost report, but you have them now and you want to reopen the cost report. So you have a 3-year period to do that. Who uses the Medicare cost report? Again, providers, Medicare contractors, federal agencies, state governments, other hospital and non-hospital providers, commercial payers, consultants, and other vendors. So it just has a vast amount of information, and you spend so much time preparing it that it ends up with a lot of information that all of these systems can use, hospitals, Medicare contractors, and so forth. So it's used by a lot of entities. Okay, so this is my favorite part of today's webinar. And the Medicare cost report, as I had mentioned, has an abundance of information, financial information, statistical information. And you can use it as a strategic tool. You can open it up and look at different costs, look at statistics. You can analyze trends in inpatient and outpatient costs. You can examine some of your facility characteristics, and then you can identify strategies to improve financial performance. So what kind of strategies can you look at? Okay. You can analyze things like routine direct cost per patient day. And in this analysis here, we're looking at direct cost and we're looking at total cost. So in column 1, we have direct cost, which is salaries, direct salaries, and other expenses. In the next column, we have what we call total cost, fully loaded cost, which is total cost, direct, and all the overhead that was allocated to the department. In this case, adult and PD. So we end up with total cost, and then we can end up with look at total charges, which is on the cost report. We can go to S-3 work paper and get total days. And now we can start computing some amounts per day. And we can look at what is our direct cost per day. In this case, the direct costs were $418 a day. And then fully loaded costs were $952 a day. So when you look at direct versus overhead, it almost doubles. So your costs are going to double for overhead. And then you can compare that to what you're charging. In this case, total costs are $952 per day, but your charges are $892. So you might want to look at that and analyze why the costs are greater than the charges. Not that it'll have that much of a reimbursement impact. And you can do the same for ICU and any subprovider, taking the total cost and coming up with the cost per day. And then you can prepare an analysis for the ancillary cost as well. And you can look at total charges, for instance, an operating room. You can look at total operating room charges. In this case, there was $10,160,000 in total operating cost, and there were $34 million in operating room charges. Now, you can, these numbers come directly from the cost report. You can go to worksheet C, you can go to the operating room line number, and you can identify and extract these costs very easily. And then what you can develop is a cost to charge ratio. So in the operating rooms number, there's 29.44%. So the cost to charge ratio for operating room is 29.44%. And basically what that's saying is that for every dollar you charge, you generate 29% in cost. Laboratory, the same thing, cost to charge ratios. If you have a cost to charge ratio that's more than 1, which in this case, we're looking at emergency room, the total cost is $13 million and the charges are only $11 million. So the cost to charge ratio is 125%. So you might want to look at that to see how you can reduce costs to bring that to an equal amount. We can look at fully allocated costs for departments. And again, look at a cost to charge ratio. For example, this exhibit reflects the direct cost to charge ratio for the operating room. It reflects the cost to charge ratio for the laboratory. So, just to look at fully department allocated costs and focus on expenses that are managed by other departments. And then you can take those costs per day, the cost to charge ratios, and then you can start to develop some trending, okay? And look to see whether or not the routine costs per day are going down or are they going up. In this case, the cost per day that you can develop directly from the cost report was $2,084 in 2023, and the cost per day in 2022 is $1,830. That's a pretty good healthy increase, and it's $1,795. So the cost per day is trending upward for routine. And then you want to make sure that your cost to charge ratios are pretty stable, and if they're not, that may be an indicator to look to see why. And as we can see in the emergency room, the cost to charge ratio for an emergency room is fluctuating on a yearly basis. So you might want to look at emergency room and identify why is the cost to charge ratio fluctuating. It could be that you're preparing the cost in emergency room incorrectly. And so you might want to look at how you're accumulating emergency room cost, how your step down cost to emergency room, or you may want to look at, your direct cost in emergency room. Are salaries going up? So again, it's a good strategic tool to quickly look at some of the indicators that might raise something that you might want to consider looking into further. You also can use the cost report as a strategic tool to, if you were considering providing services to others, or you wanted to outsource. So you could look at, square footage and what it costs for depreciation. Okay, it's costing, in this case, depreciation expense is $9.38 per square foot. You can go right to the cost report and get that number. You can go to housekeeping and you can get that number right from the cost report, and you can look at and see that it's costing you $17 per square foot to service housekeeping for the hospital. And so you might use that number when you're out trying to outsource housekeeping, and they give you a number of what it's going to cost to provide housekeeping services. And then you can go back and you can compute what it's actually costing you per square foot, and you can compare it to what you're experiencing on the cost report. And the same for meals, and you can calculate out cost per meals from the cost report. You can calculate out what it's costing you for pounds of laundry, and then you can compare that to what an outsource company would be charging you to prepare pounds of laundry. So again, it's a great tool. I mean, there are so many things other than preparing a settlement for Medicare that you can use throughout the year to look at the cost report and come up with some of these tools to analyze your hospital. Trending and comparison to other hospitals as well. So you can also do some benchmarking, and you can compare your organization with other competitors. Okay, and you can get the services and what it costs for other competitors, and you can compare it to what you're experiencing to see how you compare with other hospitals. You can look at adult and PD occupancy, and the formula for that would be just going to your worksheet S-3 part 1, column 8, and dividing it by column 1, line 1, dividing it times the number of beds. And so that's an easy way to calculate out your occupancy instead of going and pulling it from all different areas. It's right there in the cost report. You can easily calculate your average length of stay on the cost report. You can calculate out overhead expenses as a percentage of total expenses. You can calculate out outpatient charges as a percentage of total charges. And again, as we showed you previously, you can calculate out your routine cost per day. And then you can take this information and you can compare it to other hospitals and see, if you're higher or lower. So again, it's a great tool, and you can utilize it to look at many different areas of your hospital. So I guess our hour is up, and I was wondering if anybody had any questions at this point. I guess I went a little bit too fast.
Thanks, Tony. Yeah, I don't see any current questions in the chat boxes, but if you have them, please send them there.
Okay, well, like I said, we want to thank you for coming and appreciate taking the time away from your busy schedules to look at the webinar series, and hope to see you in the future. Thank you.
Thanks, Tony.